Hey there. Let's talk about what affects a mortgage rate when you're going to get a loan. Right now, we are experiencing increased mortgage rates. They're running around 7%. So people are, my customers and clients are asking me, you know, especially now since the interest rates are high, they're really digging into, how can I get, a lower rate. Um, so there are four real major things that affect your interest rate. Okay. Obviously, your credit score is one of them. Everybody knows that. So if lenders look at whether or not you're paying your bills on time, in a timely fashion, that sort of thing. So the higher the credit score, obviously less risk to a lender, obviously a lower interest rate. Commercial break. Once again, if you like this video and my others, please subscribe to my channel at any time. Please do appreciate that. And anyway, so let's go back to the four things that make up your interest rate. So credit score, number one. Okay. Number two, your loan type. Okay. Basically, what that means is there's basically four types of loans when you're getting a home. You have a conventional product, okay, FHA, VA loan, which is a veteran loan. FHA is a government-backed loan. Both of them are. And then you've got your USDA, and I'll talk briefly on those things. The first one is conventional. A conventional product, generally you're putting, 5%, 10%, 15, 20% down. Your credit score generally on a conventional product is pretty good. In most cases, that's your best way to go. It's going to give you your best interest rate. So that's something to consider. And once again, if you need any help regarding or any questions about mortgages, I am not the expert. I just know some ancillary things, but I have some great lenders that I use and I trust. So, hit me up and I can get you a list of lenders that I trust that know their stuff. The second one, which is the most popular and the most common, is FHA. FHA is basically allows a buyer to put as little as 3.5% down for those that don't have a big down payment. And they tend to be a little more lenient on your credit score. And I don't know, last time I checked, I think 580 or 540, which is, you think is pretty low. I may be wrong on that, but I think you can get a loan on that as well. But that's going to affect your interest rate. So same with FHA. If your credit score is not that great, it's going to be a higher interest rate. The third is a VA loan, which is designed for veterans, okay, which is great, and it's a 100% product. So that means no money down, and the rates are very, very competitive. So for veterans out there, it affords veterans an opportunity to purchase a house, get into something if they don't have a lot of money down, okay, and then you can roll on closing costs and things like that. So that's a great product. And lastly, most people don't realize it's called USDA, right? Everybody thinks of a steak, USDA. They check our, steak and meats and things like that. But basically, this was originally designed for rural communities, okay? So it's another type of 100% program as well, okay? So, and that affords, into our rural communities. And there again, once again, hit me up. I can send you some lenders that give you some, because everybody's in a different box and what you need and what product's good for you. But it's very important that you research all these things, and I can help you with that. Once again, commercial break. If you like this video, please subscribe to my channel. Hit me up if you have any questions. Steve Gardner, eXp Realty in the East Central Florida area, Greater Daytona Beach area. Okay, so the third thing that affects your interest rate is your loan term. So if you're going for a 30-year loan, and a good website to go to is bankrate.com. It gives you the 30-year fixed. If you've got great credit, what different lenders are battling over interest rates. But if you go to a 15-year loan, you're going to get a little bit less of a rate. So maybe a quarter point, half point. So that also affects the interest rate. And lastly, your down payment, okay? The more money, for the most part, the more money you put down will also determine possibly a better rate, okay? So because the lenders feel as though, hey, you've got some skin in the game, they feel more secure. So if you put 20% down or more, 25, 30, 40, you can get a really good rate. That does also help in that regard too. So anyway, this wasn't that long of a video, 5-6 minutes, but I hope you found this useful. And once again, please subscribe to my channel. Hit me up if you have any real estate needs, questions, that sort of thing. I'd be more than happy to answer them, work with you. And of course, I love buyers. I love sellers. Steve Gardner, eXp Realty, East Central Florida, Greater Daytona Beach area. Until next time, take care.